For our Module 3, this is entitled Financial System. Okay, for our overview, so this module is about the financial system that serves as the foundation of every country in helping its economy and its people in terms of capital, money, investment, and any other related transactions that will stimulate the growth and stability of the financial status of the nation throughout financing projects and other activities. So, this module will include discussions about the financial system, the participants involved in the financial system of the country, the Bangko Sentral ng Pilipinas, and the Philippine financial system. Okay, for our learning outcomes, so at the end of this module, you should be able to demonstrate understanding of the financial systems, familiarize and identify the different financial system participants, familiarize the Bangko Sentral ng Pilipinas, and demonstrate understanding and familiarize the Philippine financial system. For the content of this module, so we have three. First is the introduction to financial system participants, and Bangko Sentral ng Pilipinas and the Philippine financial system. To start with, let us have an introduction to the financial system. Okay, when we say financial system, this is actually a set of institutions which includes banks, insurance companies, and stock exchanges that permit the exchange of funds, capital, and investment. So it exists on firm, regional, and global levels. The borrowers, lenders, and investors exchange current funds to finance projects, either for consumption or productive investments, and to pursue a return on their financial assets. So basically here, in the financial system, we will see the investors and capitalists as well as those institutions who are needing additional fund for their projects, expansion, and other purposes. So the financial system also includes sets of rules and practices that borrowers and lenders use to decide which projects will get financing, who will finance the project, and the terms of the financial deals. So here, basically, in a more sophisticated, complex, and advanced financial system setting, so they have what we call contract between the two parties that will enter into this type of financial transaction. So this is of course to protect the interest of the investors who are providing funds or capital, and also made sure that these are legitimate projects, and there is a system that they have to follow in case of withdrawal of investment, dividend distribution, and the like. So it involves borrowers, lenders, and investors who negotiates the loans and other financial transactions. So in these markets, the economic good traded on both sides is usually some form of money. So we are talking about capital or investments here. So this is in the form of cash. It could also be claims on the future money. So that is in the form of credit extended by the investors, and claims on the future income potential or value of real assets. So this is in the case of equity securities, in which investors become part of the organization in which they provided the capital. So here, they become the stockholders or part owners also of that organization. So it also includes derivative instruments. So financial system describes also the collectively the financial markets that you have learned before. So the participants and the instruments and securities that are also traded in those said markets. So if you could still remember, in our second module, we discussed about the different financial markets and financial institutions. Okay, so there basically you have identified the different financial instruments being traded to their corresponding financial markets. So, the function of the financial system is to channel the funds from lenders to borrowers to provide a medium of exchange. So here, basically, financial system is like a platform or a medium of flow of capital invested to those organizations who are needing additional capital. So this also provide a medium of exchange, provide a mechanism for risk sharing, and also provide a channel through which the central bank can influence the economy in general and the financial system in particular. So that is why, if you could notice in our contents earlier mentioned, aside from the financial system, we also will be talking about the financial system and the banking. Okay, specifically, this is since this is part also of the financial system, so it takes its role in facilitating the flow of financial transactions for the parties involved. Okay, so these are for our introduction to financial system. So we go now to the different parties that is involved and engaged in financial system. So here, the first type of participant, and as well as their roles and function, is, as mentioned earlier, of course, basically this will include the banks. Okay, so usually you are familiar with what banks are. Okay, so they participate in the capital and money markets. So if you could still remember, in our second module, we mentioned this institution as one of the financial institutions who are engaged in deposit, in cash transactions, loans, even foreign exchange, okay, transactions. They are also part of this type of financial transactions. So here, again, they participate in the capital and money markets. So here, the banks take active part also in the bonds market. So in other types of or in other banks, I mean, depending on the classification of the services that they are providing for their customers, so they can also, or they are also offering services for bond markets. So meaning to say, the investors would like to place their money in debt instruments, can also go through banks, okay, to do so. So banks may invest also in equity and mutual funds as a part of their fund management. So again, this is one type of service that they are providing to their depositors or clients. Okay, so they facilitate the flow of capital invested by the investors to the organizations who are needing these additional funds. So banks also take active trading interest in bond market. So they also have exposures, as mentioned a while ago, in the equity market. So banks can also be, the role of banks is in the form of a market as a clearing houses. So again, they serve as a medium of flow of financial transactions. So that's how banks play their roles and their functions in our financial system. So they are actually considered to be one of the most important participants, because normally most of these transactions transpire, okay, in the banking institution. Okay, so the next is what we call PDs, or primary dealers. So who are primary dealers? So here, they deal in government securities, both in primary and in secondary markets. Basically, here, their responsibility is to provide two-way codes and act as a market makers for government securities and strengthen the government securities market. So, meaning to say, um, PDs only are engaged into that instrument, which is the bonds, because this is the only instrument that government can offer to the general public. So again, if you could still remember in our second module, we discussed that the government cannot engage or uh, sell or provide equity securities because the government is not a private entity or business enterprise that can be owned by anyone. So just try to imagine if um, the government are issuing equity securities and you will buy one and you become the part owner of the Philippines. So that is not actually the setting for uh, a country or a government. So that's why um, equity securities are prohibited, okay, for the government, okay, to be issued in this type of financial transaction. So they are only allowed to issue bonds. Okay, so again, when we say PDs, they are actually involved in the market for the government securities. Okay, so here there is no other transactions aside from this financial transaction. So this is what actually um, makes it different from that of the banks. Okay, because in banks, they are offering services for the private entities and business enterprises. Okay, so next are FIs, or what we call financial institutions. So generally, this is what we have mentioned in the second module. So you've learned there that we have different types of financial institutions. So here, generally, they provide and lends long-term funds for the industry and even in the agriculture sector. So here, they raise the resources through uh, long-term bonds from financial systems and borrowings like those institutions that are being mentioned here. So but of course, aside from this, we have learned in the second module that there are a lot of other financial institutions who are playing also their part in our financial system. Okay, so the next are the stock exchanges. So here, they are duly approved by the regulators to provide sale and purchase of securities by open cry or online. So here, this is what they do on behalf of the investors. So this is by way of facilitating through the brokers. Okay, so when we say stock exchanges, this is basically the capital market in which potential investors can go to buy securities, debt, or equity securities from those um, entity, private business enterprise who are offering their shares and issuing their bonds publicly to the general public. So this is where you can go to buy and sell shares of stocks or bonds. Okay, again, debt and equity securities. So you can be part of this financial institution or market through uh, the brokers. Brokers are the middlemen who are facilitating these financial transactions. They are the one who are making arrangements. They can also manage your fund or portfolio, investment portfolio, or if you would like to buy or sell. So they are the one who can make advice if what is the best thing to do, okay, and so on. That's related again for those debt and equity securities that is being traded in the stock exchange. So again, those corporations who are publicly listed and are issuing publicly their shares are those entities who are in the stock exchange market. Okay, so here they provide also or they serve also as clearing houses, just like the banks, because again they facilitate the financial transactions for investment and capital. So securities traded in the stock exchange, as mentioned, so equities, debt, and even derivatives. Okay, so these are the financial instruments that you can uh, see, okay, and buy and sell in the stock exchange. Okay, so another are brokers. So here, as mentioned earlier in the stock exchange, so only brokers approved by the capital market regulator can operate or participate in the stock exchange. So here, not everyone can become a broker. Basically, there is actually a license before you can become a stockbroker. Okay, or others also require specific length of time in terms of their experience, and others also might also require uh, business education background, okay, for you to become a broker. But basically, it has a license, okay, and they are regulated by the capital market regulators. So brokers perform the job of intermediating, or they are the middleman between the buyers and sellers of those securities that are being traded in the stock exchange or other types of financial institutions. So they also help build up order book, price discovery, and are responsible for a contract being honored. So for their services, brokers earn their fee, known as brokerage fee or commissions. Okay, so here, as mentioned earlier, as part of their job, so they are the one who are facilitating the capital and investment transactions in the financial institutions. Okay, so they can advise, they can speculate, um, they can also select or manage your investment portfolio for you. Okay, so the next are investment bankers or merchant bankers. So here, these are normally the agencies or organizations that are regulated and are also licensed by the capital market regulator, just like our brokers a while ago. So here, what they do is they arrange the raising of funds through equity and debt route and assist companies in um, completing various formalities like finding of the prescribed document and other compliances with the regulator. So, investment bankers are actually like a blend of banks who serves as a clearing houses for investment transactions and a broker at the same time. Okay, so they have the similarities, but in this case, they actually identify themselves as such, because here they are more of uh, on the raising of equity and debt. For the broker, aside from the equity and debt securities, they can also facilitate financial transactions um, through selling plant assets, long-term assets, aside from equity and debt securities. Okay, but here for our investment bankers, this is what they actually focus on. Okay, so the next are foreign institutional investors. So they are foreign based funds authorized also by the capital market regulator to invest in countries' equity and debt market through the stock exchange. So this is a multinational or inter-country financial transactions. Okay, so they are allowed to repatriate sale proceeds of their holdings, provide sales, have been made through an authorized stock exchange, and taxes, of course, should be made or paid before any transactions can be considered complete. Okay, so again here, if you want to enter into a foreign stock market, or if you want to invest in another country's equity and debt market, you can go through the foreign institutional investors. So in our stock exchange, this may be local stock exchange, meaning to say, for example, in the Philippines, who are those corporations who are offering their shares and issuing debt instruments here in the Philippines. So actually, there are also foreign corporations who are present, but they have to comply first with the regulation and the requirements of the country before they can join and become publicly listed also in our country. Okay, so but of course they have to go through a process, okay, in order for them to do so. Okay, so the next are the custodians. So here, um, they are the organizations which are allowed to hold securities on behalf of the customers and carry out operations in their behalf. So, based on this definition, we can see that they have the same function as that of the brokers. So, here they also handle both funds and securities of qualified institutional borrowers, including foreign institutional investors. So, here, the brokers, basically, the difference between them is that in the case of the brokers, they can facilitate transactions of the individuals. Actually, they can also work on the investment of the institution or the enterprise, but that's seldom. Uh, that is seldom uh, uh, taken by the brokers. So if you are an institution, meaning you are a corporation, a company, an organization, and if you want to go through the stock exchange or foreign exchange market, so you can go through the custodian. So they can facilitate these transactions or financial transactions for you. Okay, so they are supervised also by the capital market regulator, and they handle the payment and settlements. So the banks are able to play the role also in this case as a custodian. Okay, so therefore most banks actually perform this role. Okay, so if you don't want to engage with the brokers, or again, if you are an organization, you can go through the banks, and they will serve you as their role as custodians. Okay. So again, the main purpose or the overall objective of these participants are to facilitate the financial transactions in the financial institutions. Okay, so the next is depositories. So here, what they do is they hold securities that is in electronic form. They also maintain accounts of the depository participants, who in turn maintain also accounts of their customers. So again here, depositories are engaged into financial transactions that is in electronic form, and they are maintaining, monitoring, and updating, okay, the accounts of their customers. So, on instructions of the Stock Exchange Clearinghouse, supported also with the documents, a depository transfers securities from buyers to sellers' account in electronic form. So, you have to understand now that in our setting, we are now moving toward paperless transactions. Actually, this has been in the business for quite a long time. So there are no papers, documents that should be signed. Only authorization through electronic form should be made. Okay, so that's why there are a lot of scammers out there who can take advantage of this type of transactions. But in order for you to be sure and protected of these types of transactions, so you can go through the depositories. This is a legal and legitimate way of letting your cash or investment be transferred to the entity or to the stock market or to the stock exchange or whomsoever you have placed your financial transaction to, without worrying of a scam or um, loss of those investment, okay, by going through the depositories, because in this case the audit trail or the paper trail cannot be um, uh, identified, meaning to say the transaction is just with a snap of your finger, with a click of your phone or electronic gadgets. So that's how electronic transactions take place. Okay, so that's why it's very dangerous. But again, to make sure that this transaction is legitimate, you have to go through these depositories. Okay, because they are the ones who are authorized to facilitate this type of financial transaction. Okay, so the next is the households or consumers. So we also play an important role, and we have also functions in our financial system. So here, households or consumers are described as that group receiving income, majority of which typically come from, so the normal or the usual source of income for the households are the wages and salaries. So unless you are a businessman, you can have your income from your business or from passive income or whatever types of income you may have. So their gross savings is equal to their current income less their current expenditure. Okay, expenditures that are spent on goods and services. So this is part of what they are saving. Okay, again, their income minus their expenses. What is left is their savings. Okay, and then savings can become an opportunity to be invested in the different types of financial institution to earn interest, dividends, and return on investments. Okay, or others also deposit it in the bank, okay, to grow for interest or whatever purpose they may have. Okay, next are the non-financial institutions. So aside from financial institutions, we also have non-financial institutions. So they are businesses such as trading. Okay, in this case, this is actually, or they are classified or called as non-financial because they are not engaged into the facilitation of financial transactions in the financial system, but they are also part of the financial system because they also are engaged into business and earning profit. And just like the household, they also have their net income or profit that can also be invested or deposited in the bank. So they are businesses such as trading, manufacturing, extractive industries, construction, and generic industries, and they can also be the lender. Okay, become the participants also in the financial system. Okay, they can be the lenders, investors, or they can be the borrowers. Okay, they're the ones who are issuing. If in the case if they are corporation, they can issue shares or they can also issue bonds. Okay, so that's why they are considered to be an important part also of our financial system. So normally, when we say businesses, they take an important role uh, the in driving the market because they are the ones who are providing goods and services which the customers or consumers are actually purchasing. So they are the ones who are providing the supply for our demand. Okay, of course, the government is part of our financial system. So the government is the national, provincial, city, and towns comprising the Philippines and our country as a whole. So again, they have They form part of the financial system through regulations, again, other matters that are um, required to be complied by those financial institutions who would want to engage business in our country. Okay, so the next is, of course, the central bank. Okay, so central bank is an institution that manages a state's currency, money supply, and interest rate. So central banks also usually oversee the commercial banking system of their respective countries, and that is why central banks are considered to be the mother of all banks. Okay, they are the highest form of bank in any country. So again, because they are the ones who are overseeing the commercial banking system. So you will learn more about this in the later part of this module as we go along.